Hello, everybody, and welcome to Traditions Going Vertical Podcasts. I'm your host, Mike Greenlay. As usual, I have my co-host, Erik Hendrikson. He's president of Tradition Mortgage. Glad to have you aboard, Erik. And our special guest today is Nick Hanson. He's a senior partner with Tradition Mortgage, and he's going to be discussing some of the trends in the housing and finance right now. And Erik will, of course, bring his knowledge to that topic as well. There's a lot of different ways to kind of attack this because it's just been very volatile, and we've just seen a lot of things that we haven't seen in quite some time. So, Erik, I'm going to let you take it away and kind of give us a State of the Union here right off the hop, and kind of get us started on what we're going to talk about, and which is trends in housing and finance.
Yeah, I appreciate it. Thanks, Mike. And I think it's timely talking about these things, and you and I have discussed what do we want the topics of our podcast to be, and I think for the next several episodes, just really talk about the trends in housing and finance, because there's so much, it's so fluid right now, there's so much volatility, so just that is going to be something that you just give a update every couple of weeks as to what we're seeing. I think is important, really. Before I let Nick dive into some of the discussions that he's been having with his clients and just the advice he's given, just an update on where we're at with mortgage rates. It's the last several months, you just as a mortgage lender, you're always wishing for lower rates, right? And you see what we've been seeing is kind of these false summits where it looks rates will pop up very fast, and then we'll see a little bit of a rate rally downward, but it ends up being about half of what the most recent increase was, and then all of a sudden immediately it'll spike up again, and it does this kind of little bit of a scissors action. But the unfortunate result was an overall upward trend of the last several weeks. And we've seen that the last few business days again already, a nice little rally, and it's we just are afraid to cheer or say anything about it because we don't want to jinx it. But the bottom line is, it's all really driven by inflation and what expectations are for that. The Federal Reserve has been bumping up its federal funds rate significantly. We're looking at probably another 75 basis points coming up here next week. And again, that's just to try to slow credit activity down, whether that's credit cards or commercial loans or mortgage loans as well, too, is just to try to slow down that activity. Because that's really the only way that you're going to get ahead of inflation. So the question is, as I mentioned in my Mortgage Minute this week, is it too much or not enough? The Fed has done a significant number of very large increases. Historically speaking, to do 75 basis points in one move is almost unprecedented, and now we're going to be looking at 4 in a row. So the thought is, like, have you given that enough time for it to really percolate down through the economy? Is there enough damage already being done that you really don't need to continue on? They're looking for immediate results in inflation reports that are definitely backwards looking. So by the time you realize inflation's where you want it, all of a sudden are you going to find the economy has been put in a place that now things are being harmed beyond where you really wanted it to be. So each inflation report going forward is going to be huge. There's one coming up this Friday, the PCE, that will be watched at very closely as well, too. I think the 75 basis points, that's already baked in the cake for next week. But I think the PCE might give us a little window into, how significant is the current level of inflation. And if that shows some downward signs and surprises on the low side, you might see a pretty good rate rally even on Friday.
So, Nick, analysts, different mortgage people, loan officers, and presidents of mortgage companies dig deep into the numbers. I mean, that's what you guys do, and you do it so you can understand all the nuances. But Joe consumer, people like myself, we don't look at as many numbers, and usually we're looking at maybe 2 or 3 numbers. Inflation's obviously one number you look at. Rates, interest rates are another number. So you talk to consumers every day and all day long. What are some of the, trending topics that you're discussing with people? I'm sure they have a lot to do with the interest rates and the inflation numbers, but are there, how does that all balance when you have a conversation with your clients?
Sure. Rates are number one. Rates. Everybody wants rates, and kind of what's happening with that. And obviously, we're at a point right now that we're in the highest interest rate environment we've been in over 20 years, which is a very long time. Historically, we're still, if you look over a 40-year trend, we're still below the average. So try to give the glass half full to clients, even though we've been kind of spoiled here these last couple of years with them being artificially so low. Kind of puts things into check that historically we're still okay. But people want to know, when are they going to come down? And inflation's a big driver of that. And what we try to do a really good job of is letting people know when they're buying a home that this might be your forever home, but not necessarily your forever loan. And what we mean by that is, yes, you might have to bite the bullet. Your payment may be a little bit higher than maybe you were hoping. But we're going to be watching the markets for you. That's our job. That's our responsibility to you and the relationship we're going to build with our clients. So as soon as rates do come down, we're going to be the one on the phone with you, being able to help you ease that pain with that payment. And we're going to continue to do that as rates go down. And that's something that we take a lot of pride in here at Tradition, of taking care of our clients all the time. So that's the number one thing, the rate part of it. And like I said, we're in a tough spot right now because people are paying more than what they probably want to, and they're stretching a little bit. But historically, we're still not in a terrible spot. And so I try to shine a little sunshine on the situation as much as possible right now.
Nick, just curious, our offices are right next to each other, and Nick, you walk by him, he's on the phone talking to clients literally all day long. He probably talks to more people. His volume of origination, he's probably one of the top volume guys in the nation. What are you seeing as far as when the clients are calling you? What are the reasons behind them being interested in looking at a house right now? Because you said there's been a pretty big run up in appreciation. Houses are expensive, but at the end of the day, life goes on, and people are looking at homes. And I think there's a lot of people that are probably listening to this that are kind of thinking to themselves, "Am I crazy for wanting to buy a house right now?" My response would be absolutely not, but maybe you can give some live case studies of just some, people out there and what's going on in their lives that are making them think, hey, this is the time that I want to or need to buy a house.
Questions I get a lot, is buying a house a good investment? And it's kind of twofold. If I tell people, if you're looking at buying a house to fix it up, put some lipstick on it and sell it, probably not the best time to do it right now. If you're looking at buying a home and you want to potentially raise a family there, that's always a good time to buy a house, because you're probably going to be there and you're going to be growing, with your family. And it doesn't really matter what's happening in the market in the next 1, 2, 3, 4, 5 years. The housing market always continues to appreciate. Now, at levels that we have seen in the past couple of years, no. And we don't necessarily want that either. We want that steady, slow appreciation, which hopefully we'll be getting here. So it's really two trains of thought, and then the first-time home buyer, that's a kind of another bracket. Maybe you're not married, maybe you don't have a family, and it's like, what do I do there? Buying a home is a big driver of building wealth for people. That's just how it has been always. If you talk to financial advisors, they're going to tell you the same thing. You just have to be strategic with it. I always tell people, you're driving the bus, I'm here to help navigate. We're here for the long run here at Tradition. If you're going to buy a house this weekend, I tell them, I'm going to be here for you. You're going to buy it in 6 months, I'm going to be here for you. And, I say, I work for you. I will give you all the answers that you need. I'll give you all the unbiased data that you need, take the emotion part out of it. But at the end of the day, it comes down to the client, just providing them the best information that you can.
So, Erik, loan officers handle a lot of the, in front of client meetings. They do a lot of phone calls. I know you do as well. But you're also overseeing a lot of the loan officers. So as the president of Tradition Mortgage, what are some of the things that you, want to remind your employees and people that you're trying to continue to help move along through these tough times? What are some of the things that you like to discuss with them so that they can then impart that on their clients and the consumer?
Well, first, internal dialogue. It's interesting how times can change pretty fast. You walk around town, the past couple of years, and you say you're in the lending business, and they're saying, lucky you. And then this year you walk around town and you get in a conversation and you say you're in the lending business, and they say, I'm sorry to hear that. But nobody's feeling sorry for us. So that's the biggest thing, that I talk with our teammates, and I'm an originator as well too, so we're all doing this together, is that level activity. We can't control interest rates. We can't control the economy. You can't control the level of housing inventory that's available. But what we can control is ourselves professionally and what we provide to people. We're experts. We're consultants. We're the people that you can call and talk to, and we can give you straight, honest answers, and we can find loan products and solutions that can be customized to what you need. So you're not always going to be super busy on the phone talking to people that are looking to buy a house, but you can always be super busy. And I think this is a time where we're reaching out to past clients, where we're building our networks, we're taking time to work on those relationship elements that maybe we didn't have time before when you're just so busy trying to take care of people in kind of more of a refinance market. But just like Nick said, there's never a perfect time to buy a house, no matter what. There's just the situations in your life that can help you be in a better spot. And as Nick also mentioned, the longer you can look at a time horizon whenever you buy, appreciation over time, just kind of like the stock market or whatever. The shorter windows you look at, there's going to be dips there where it might be negative, but you back up and you look on it on a multi-year basis, then you see positive returns, and that's real estate. We had a big dip after the financial crisis in 08 where real estate was negative for a while, but look, we're back up well above it again. And that, for those of us over 50, that really wasn't that long ago, and we thought, my God, housing will never recover from that, and it did. So I think just, being a calm influence and being able to really give people, that calm advice, or if necessary assurances that, you got to look at your life situations, and we'll help you understand what you can afford. And, there is less people out there chasing down houses. You don't see the big multiple offers quite as much anymore. I mean, quality always sells, but, you're not going to be 5 deep in line putting an offer on a house. So there are opportunities created inside a market where rates are higher, because it does maybe scare some people off, but those that are really in the need of a house and their life situation calls for it, I think there's opportunities that are in there. So, but we do have a solid economy where there's lots of jobs, people are making money, and that drives things. Personal well-being, wealth, stability, that is a very important thing, and we have that. We didn't, the last financial crisis, you have people losing jobs left and right, housing values are depreciating, we don't have that. So there's a lot of things to be grateful for that we do have, even though, we did come off a great bull run with rates, and they're higher now. But again, there's always people that need our services, and we just have to be a little bit more proactive about letting people know we're here to work with them. But you know what? We're in for the long haul, like Nick said. We're going to be here today, we're going to be here tomorrow, we're going to be here next year, we're going to be here 10 years from now. It's what we do. So
just to wrap things up, Nick, just want you to kind of give us your feelings on what you kind of do going forward. I mean, I know that there's been a lot of consistency, especially with Tradition Mortgage. But is that the secret, to just kind of stay the path and continue to be consistent in how you operate and how you contact and communicate with your clients? Because ultimately things do cycle back down the other way.
Yeah, Mike, I really think that's what separates us at Tradition, is that we're not only here for our clients when we can do a loan for you. We are keeping in touch with you on semi-annual reviews, annual reviews. We're continuing to show that we care for our clients. And that's the number one thing, is that we're here to build relationships with our clients. And that's a big separator, because people do truly appreciate you looking out for them at all times, when times are really good and you can save them money, or in times like right now where rates are higher, and just letting them know they're in a good situation. People do appreciate that you're taking out the time to do that. So being consistent with that, and again, showing that we care is a big driver.
We're talking about trends in the marketplace. It's been encouraging to see. I just read a couple news releases already this week. I don't know if this is the MBA that was putting out kind of predictions for interest rates, which really track the long end of the bond curve, down close to 200 basis points from where we are today by the latter part of next year. I mean, that's a big swing. So for people that are buying now and they're using a 30-year fixed rate, that's a big savings. And I think it's also assuring what we're seeing is a move towards adjustable rate mortgages, or what's known as hybrid ARMs. So your rate's not adjusting every single month based on what's going on in the market. You're fixed in for a period of time. If it's a 5-year ARM, you get 5 years of a fixed rate, or a 7-year ARM, you get 7, et cetera. But a lot of people are taking these loans out, and I don't think it's a bad strategy to kind of get the best rate you can. But then if it is their forever home, that next loan potentially is that 30-year fixed rate where you can lock in, and it's, historically speaking, it's at or below hopefully the long-term averages, and you can kind of lock that one in. And if for whatever reason it goes lower at some point after that, you can always do it again. But I think those opportunities are coming up there, so people just being open to maybe some more of those ARM products that historically people have obviously wanted to go to fixed rate if they can, and it's been a lot of years since those ARM products have been dusted off, taken off the shelf, dusted off, and used. But I think they can be highly useful because they do give you the security of a pretty good duration of fixed rate before you be going an adjustable period. And again, a lot of people are starting to talk about, hey, we've finally gone over the top of the mountain peak here, and we're going to be seeing inflation coming down, and by the end of next year we might be in a radically different position as far as mortgage interest rates. I don't have a crystal ball. I'm just saying what we're looking at. There's a lot of variables to play out. You look at the war in Ukraine. If that was to come into some kind of a resolution here sooner rather than later, that could have a massive impact on things as well too, and we just pray for that. Regardless of what that does for the housing market, certainly we would pray that that conflict can be resolved. So, there's always things that we're looking for, but I do think there's some green shoots of positive news on the horizon.
Well, gentlemen, thank you for joining us once again here, because we definitely want to stay up on current events, and they are forever changing, it seems like, and so we'll try to stay with you here as we move along every week or two here with pertinent information. And if there is one thing that I've seen so far with Tradition Mortgage, and that is that they have solutions for whatever the market may be presenting, and whatever the best solution may be. So keep up the good work with that, guys, and thanks again for joining me.
Thank you.